Hello and a very warm welcome to Bloomberg UTV. You're watching Talk Funds, and this is where we take all your fund. Joining us, Diana. Now, joining us on the show also is our expert, Hemant Rustagi. He's the CEO at Wiseinvest Advisors. Thank you for joining us, Hemant. Let me start with the infra bonds. What is your take on it, and also what about bonds like IDFC and L&T?
Well, I think these are definitely a good option for all the taxpayers who want to save tax. You know, these bonds are basically under Section 80C CF, which allow the taxpayer to basically save tax by investing up to 20,000 rupees under this section. Now, this is over and above the 1 lakh limit which is available in 80C. You know, any instrument that allows you to save tax, I think, should be definitely looked at because it enhances your overall return. And moreover, if you make tax-saving instrument as a part of your overall portfolio in terms of asset allocation, you can actually make a good selection. So I would say that these bonds are a pretty good option, like I said, because it gives you an option to save tax on another 20,000 rupees. Both are good options. Any investor who's looking at investing in these should look at two things. One is the credit rating. For L&T, it is AA+, which is also healthy, and for IDFC, it is AAA. Both the funds are good. Only difference is in terms of the face value. In IDFC, one has to invest minimum of 2 bonds, that is 10,000, and thereafter in multiple of 1 bond, which is 5,000. Whereas in L&T, one has to invest 5 bonds of 1,000 each, which is minimum 5,000 rupees, and thereafter in a multiple of 1 bond, which is 1,000. So depending on how much investors want to invest, they can look at these bonds.
Right. Okay, let's take our first caller for today. Jairam joining us on the phone line. Jairam, good morning. Good afternoon.
Hi to all.
Yes, Jairam. What's your question?
Yeah. So, I'm investing in SIP modes in following funds like I'm investing 2,000 in HDFC Prudence,
okay.
DSP BlackRock Top 100,
okay.
Reliance Gold, and ICICI Prudential Focus Blue Chip. And I'm also investing 1,500 each in Quantum of Equity, Birla Sun Life Dividend Interest, and Fidelity Equity. So my objective is to create long-term wealth,
right.
and I'd like to invest for another 10 to 15 years. I'd like to know whether my portfolio is good enough to achieve that goal. Also, whether I should prune my portfolio to achieve that goal.
Right. Okay, fine. Hemant, 10 years is his time frame, which is good, and he has allocated some amount to gold fund. So basically, is he on the right track? Also, which one should he hold on to and which one should he redeem?
Well, I think it's definitely on the right track. One, because his time horizon is around 10 years, which is ideal. In fact, you can extend it from here. Whenever you're investing through SIP, you need to invest for a longer term horizon. That's how you get the benefit of averaging and also from power of compounding. So definitely, in terms of strategy, Jairam is on the right track, and he's investing, through equity fund, which is again an asset class which has the potential to beat inflation over a longer period of time. He's also rightly identified the fact that he's investing in too many funds. I think he's investing around 12,000 rupees in 7 funds. So there's definitely a scope to reduce the number of funds here. But I must say that his fund selection has been pretty good. So on the basis of merit, there is no need to reduce number of funds, but definitely because when you have over diversification, it can harm the portfolio in the long run. So slowly he can reduce the fund. I can give one example, like he has investment in DSP BlackRock Top 100, which invest in top 100 companies in terms of market cap, and also in ICICI Blue Chip Focus Fund, which also invests in the, as the name suggests, in the blue chip companies. So, this is again a fund which has a concentrated holding. So maybe he can look at one of these and then align the basically portfolio in terms of also looking at whether he should be investing 4,000 in large cap or 3,000 in large cap. That is one way of reducing the number of funds, but there is no hurry. I think he can do it over a period of time. In case he is looking to invest more money in future, then he can retain these many funds, but ideally he should reduce at least 1 or 2 funds from this.
Okay, fine. Let's take our next caller, Mahindra Kotak. He joins us from Mumbai. Mahindra, good morning. Good afternoon.
Hello.
Yes, Mahindra, बोलिए. आपका हाँ बोलिए.
मेरे पास अशोक लेलैंड.
हाँ Mahindra, बोलिए.
अशोक लेलैंड 200. Rate 24.90.
Okay, this is Mahindra. ये
5 आइटम है मेरे पास. तो दूसरा है SBI.
महिंद्रा, आपके पास HDFC टॉप 200 है?
हाँ.
HDFC टॉप 200. आपका क्वेश्चन क्या है? ये स्टॉक पर है?
मैंने जो पैसा लगाया है उसके बारे में मुझे पूछना था, क्या करूं मतलब?
महिंद्रा, ये आपका क्वेरी स्टॉक्स पर है?
हाँ।
अच्छा महिंद्रा, फिर आपको कल सुबह 10:30 बजे आप फोन करिए, वो शो है टॉक स्टॉक्स, ठीक है?
ठीक है, ठीक है.
Okay, fine. So on, let's take a quick email then. We have Irvin writing in from Chennai. He's 32 years of age, and his monthly income is 25 lakhs, and he's invested monthly income as giving. He's saying he's giving good returns, and he wants to know whether he should hold Sundaram Financial Services thematic opportunity fund, invested 5 lakhs, but in 1 year it's showing 30% cut. So should he hold on to it or he should change? So he has made a lump sum investment in Reliance monthly income plan and Sundaram Financial Services, Hemant. The funds aren't doing too good. So should he hold on for a while or switch to some other funds? What do you suggest? He hasn't really mentioned his time horizon.
Sure. See, MIP basically essentially are what we call the debt-oriented hybrid funds. These funds, invest typically around 75 to 80% in debt, and the remaining money is invested in equity. What we have seen in the last 1 year, yes, as a category, MIPs have not done that well, but I must say that Reliance MIP has had a good track record. Why they have not done well is because in the last 1 year, we've seen the market falling by almost 25%. So typically in a fund which has an exposure of 20-25% to equity, and if you've lost around 5% due to the fall in the market, obviously it is going to impact the performance, and I think that is what has happened with this MIP as well as MIP funds as a category. I believe that if his time horizon is rather 3 or 5 years, he can continue in these funds. These funds have the capability to perform well over a period of time. As we see the market improving, you will see the returns also better, because typically what has happened is if 80% is invested in debt, which has earned around, let's say, 8% or so, most of it has been eaten away by the fall in the market. So I think depending on his time horizon, if he can wait for another 3, 4, 5 years, he should continue in that. As far as the Sundaram Financial Service Sector Fund is concerned, this fund typically invests in the banking stock. Now, as we know that interest rate has been rising, which is obviously not good for the banking sector. So it has definitely affected the banking stock. That is why this fund has not done well over the last 1 year. But now, considering that we are almost at the fag end of rate hike cycle, we expect the interest rates to stabilize and then maybe start falling after some time. And in that scenario, I think the banking stock should do well. Here again, it depends on if he has a slightly long-term horizon, and if he has the capability and the capacity to take risk that comes with the sector fund. I would definitely recommend holding on to this, because banking as a sector definitely has a lot of potential.
Okay, fine. On that note, we slip into a short break. You can keep calling us on the number that is flashing on the screen, 022-4098-7300. You can also drop in an email at talkfunds@yourmoneysite.com. Welcome back. You're watching Talk Funds. Let's take another email. Rajat Pandey writes into us. He writes in from Mumbai. He's 30 years of age, and he wants to build a portfolio of 4 to 5 funds for SIP investment, and he can hold on for 10 years. So Hemant, which funds should he invest in? He hasn't mentioned the amount, how much he can invest, but he says he can invest 4 to 5 in 4 to 5 funds. And do you think equity funds is the best option?
Oh, definitely. I think the intent is very clear here. He has defined his time horizon for 10 years and more. Clearly, when you invest for that kind of time horizon, your focus is on building a corpus. And in that case, you have to look at an asset class which can beat inflation over that period. Equity definitely is an ideal option here. Since he's going to be investing the way it looks for the first time, his focus should be on diversified equity fund. He should avoid any kind of thematic or sector fund at this stage, because these funds should be included only after you have become comfortable with equity as an asset class and you build up a reasonably big portfolio. So in this case, he should go ahead and start investing through SIP. Like I said, focus should be on diversified equity funds. I can recommend some funds for him. He can look at SDFC equity fund, which is a multi-cap fund. He can look at ICICI Focus Blue Chip Fund, which is, as the name suggests, invests only in the blue chip companies. And then he can look at Reliance Equity Opportunity Fund, which it's an opportunity fund and invests primarily in the mid-cap and small-cap stocks. He can look at IDFC Premier Equity, which is a mid-cap fund, and Fidelity Equity, which is a multi-cap fund. I think these are 4 or 5 funds. Depending on how much he wants to invest, he should look at 2 or 3 or maybe 4 or 5 funds. He can look at all the funds depending on how much money he wants to invest. But make sure that if he's investing at around say 10,000 or so, 2 or 3 funds should suffice.
Okay, let's take a caller now. Sundar joins us from Chennai. Good morning, Sundar.
Yeah, good afternoon. This is Sundar.
Good afternoon. I keep saying good morning today. Okay. Yes, Sundar.
Okay.
Tell me.
Yeah, madam, I am investing so many mutual funds based on my target goals and all.
Okay.
But that's I would like to know whether shall I continue with Reliance growth and Reliance regular savings system, because it is nowadays it is started underperforming. So I would like to know this is how the two funds performance. Another thing is, few years back I invested in SB Magnum Tax Gain and Principal Personal Tax Saver, which is giving around 40% loss as of now. Shall I book losses or shall I continue or keep it on hold? I don't have money as of now. I can hold it for another maximum 5 or 10 years also, no problem.
5 to 10 years. Okay, yes. Fine, Sundar. So Hemant, he has investments in Reliance funds. Not a very diversified portfolio, but his time horizon is long. Should he switch to some other funds which are performing better?
Well, let me begin with the 2 funds of Reliance that you mentioned, because these are typically open-ended funds. Reliance Growth is a fund which is a mid-cap fund, and Reliance Regular Saving is a multi-cap fund. Both the funds, unfortunately, have not been doing well over the last couple of years. In fact, Reliance Growth Fund, I would say, has not been doing well for almost 3 years now. Now, the decision whether to hold these funds or not, one, Reliance Growth, definitely he should exit. And he can look at another fund of the same mutual fund, which is Reliance Equity Opportunity Fund. Reliance Regular Saving, the long-term track record is good, but like I said, it has not been doing well. Now, depends on if these are the only 2 funds in the portfolio, then definitely I would recommend getting out of both. In that case, he can look at, like I said, Reliance Equity Opportunity or ICICI Blue Chip Fund. That is a large cap fund, and one is like multi-cap and a mid-cap kind of fund. That combination will be pretty good. As for his 2 tax-saving investments, SBI Magnum Tax Gain and Principal Tax Saver, these 2 funds, if you look at the category average, have not been doing well again for the last couple of years. If he has completed his lock-in period, mandatory lock-in period of 3 years, my recommendation would be to exit from these 2 and reinvest the money in some well-diversified funds. Some of the funds we have already discussed today. He can definitely look at these funds. The key is that in an ELSS, you have a seasonal kind of money flowing in, which sometimes makes the performance a bit erratic. So since he has the capacity and he intends to hold it for another 3 to 5 years, what he should do is to exit from these, even though there is a loss. Because what you need to see now, the reality is that there is a loss in the portfolio. How do you make good this loss? Whether the same funds can do it or some other funds can do it. So to my mind, I think it will be better that if he moves that money from these 2 LSS and goes into some well-diversified fund which have a consistent performance track record, that will be better for his portfolio.
Okay, Hemant, thank you so much for that, and thank you for joining us. We appreciate your advice. We're going to slip into a short break, but you can keep calling us on the number that is flashing on the screen, 02240987300. You can also drop in an email at talkfunds@yourmoneysite.com. Stay tuned, we'll be right back.